Hi everyone, welcome to the first episode, groundbreaking, pioneer episode of IRTV with the leadership of Airasia. I'm the first guest and I'll be answering the many questions that you sent through last night prior to our AGM tomorrow morning.
Okay, so Tony, question one. What's our long-term dividend guidance for Airasia Berhad?
I think dividend is, I think we're one of the few airlines that consistently paid a dividend. There are two sorts of dividends. There's one that's going to come from cash flow and earnings, where we used to have a policy of 20% of net operating profits, but that could get better, and so we're not going to give a policy anymore. So there is an annual dividend that is going to be our policy forever. Obviously cash flow being able to generate that dividend. And then we're going to have many special dividends, of which obviously the big one to come will be the sale of the leasing company, which has just happened, and the board will decide how much of that is dividended out. We have Expedia that is in its final bits of closing that deal, and we still have AACL not sold, and we have about 35 aircraft. So there's another 300 to 400 million of special dividend that still can come, 300 to 400 million US dollars, once we sell AACL, because BBAM just bought assets. We still have the platform AACL, and we have about 35, 36 aircraft COs which we haven't sold. So there's still a lot of value that hasn't been crystallized yet. First time that's being heard on IRTV or anywhere.
Thank you for that. I understand Internet of Things will reduce costs by 40,000 US dollars per aircraft per year. The group's target savings will be about 6.7 million US per year. How much capex is required to realize these savings?
Very little capex, because we just need the sensors are already on the aircraft. We just need a small box to translate the information from the plane sensors to readable data. It's called formats, and it's a very small cost. So small I can't remember it. But Internet of Things, that's just one project. There's going to be a lot of other projects that we think we can save lots of money from operational disruption. We're building a lot of AI models in terms of predicting delays with weather patterns. So there's going to be a lot of delay costs taken out, a lot of maintenance costs, which is where the question comes from going forward. Internet of Things is very, very exciting from us, and over the next 6 months we will tell you more and more of the projects we're doing to take cost up.
Okay, let's talk a little bit about the BBAM transaction. What is the full year earnings impact from the leasing entity sale and leaseback exercise recently announced? What is the loss of leasing income revenue?
I think we need this. This is something, I mean, you've asked for the waterfall charts, etc. I've asked Esme and team to start working on that so we can be as transparent as possible to aid you in your analysis of our results. So give us a week or so and we will send you out what the P&L will look like, excluding and the timing of these adjustments, so that you can do some proper analysis.
Let's talk about India. What is the game plan here given recent allegations by Indian authority on corruption charges? In the event of an outright closure as a worst case scenario, what should we expect?
Okay. India is, I think part of the problems we're having in India is that we've been so successful. Our board has just put out a very strong statement on the allegations. Must be noted, these allegations have come from an individual, and they are allegations. The FIR is a first incident report where someone makes an allegation and the police are there to investigate. We're very clear that there is nothing there, and so India carries on as per normal. So please read the statement put out by our board on that.
Thank you. Let's talk about Japan. As for Japan, notice that AirAsia's equity stake in AirAsia Japan has risen beyond 50% to 63% recently. We understand that there is a cap on foreign ownership in foreign airlines in Japan. Isn't this a case now?
The case is 70%, And to be honest, I told our shareholders that I would rather contribute because it's our dream to own airlines more than 50%. In fact, we would like to own airlines 100%, and that's what the ASEAN and Airasia group is all about, so that one day we could own Malaysia, Thailand, Indonesia, majority stakes. So the opportunity to own more than 50% in an airline has never existed until now. So we said to our partners, we will take on the economic interest of 70%, voting interest is still 30%, and at further capital requirements, all partners will contribute. Japan is doing extremely well under some hugely tough conditions of regulatory approvals. I'm spending more time in Japan. We're actually moving our office right next to the regulator's office, and we've just got approval for our third route, which is third route to Sapporo, and we're starting applications to Taipei and to Korea very soon. So, you know, it is a very tough market to break into. There are no independent airlines apart from AirAsia. Even Spring now has influence from Japan Airlines Group. But we believe that the prize is great, like India. So we will continue to persevere, and we think the results will be strong, just like I predicted in the Philippines and Thailand a long time ago. And I continue to predict in Indonesia.
You've recently given a talk at Money 2020 about your fintech product. Let's talk a little bit about BigPay. Who are the current user base of BigPay and target users in the next 2 years?
I think just before I answer that question, this requires a TV program by itself, and I hope I'll be given the slot to explain this, but we are a very exciting company that people are slowly beginning to see. If you look at Uber or any of the big digital companies, they've spent a fortune acquiring customers. We make money acquiring customers. We carry 89 million people this year, of which we have tremendous data for, and we make good profits and good margin from those customers. So the airline is basically split into two now. There's the airline operation run by Bo Lingham, and the digital part of the company run by Irene Omar. What is that company all about? That company is about using the data, very valuable data we have, to aid the airline operation. Reduce cost, as a previous question was on Internet of Things. 2, to sell more efficiently by knowing our customers better, by personalizing websites, by personalizing offers, by sending a good offer to someone on WeChat. This has taken a tremendous amount of work to build that data. So that's a big part of Irene's job. 3, to use data to manage the operations better, i.e. boarding with a face, boarding with a thumbprint, bag drop, which we've just put in, and so on and so forth. Very soon you'll be able to buy a ticket using your voice on our app. You'll be able to pay with your face. So those are the 3 internal parts of Irene's job of data, apart from making our own staff's lives easier through our new EIS program, Workday, through Oracle Financials, through small programs like expense management being done by Concur. These are all projects to increase the productivity of our staff, reduce cost, and increase the revenue potential. So that's a big part. But the other part is what we call Red Bead Ventures, where we now have about 4 platforms or 4 ideas to monetize the very huge amount of data we've got, of which most analysts, most of you, haven't really given us any value for. And I think that we have some very valuable assets. I have a management update from BigPay right here, which I'd rather go into a proper presentation on BigPay, but BigPay has the ability in the short term to accrue many customers. We're accruing them at about 4,000 a day. We're already up to about 150,000 cards with no real marketing promotion. Why does someone get a BigPay card? Fees are less when you use it. When you travel, we don't charge a lot on exchange. And the ability to lend money at some stage, the ability to do money remittances, of which many of our passengers use, is huge. BigPay will be an ASEAN product. It will be very similar to Alipay plus more. And we have a big advantage because we have a huge ASEAN database, very, very valuable product. The customers will be principally our travelers at the moment, but I'm sure that will grow in time. It's a great product for us to reduce and make things easier in Airasia, but it's already a very profitable product for us.
Coming back to your management report on BigPay, what is the current operating profit or losses for BigPay, and what do you see as a monetization model for BigPay, let's say 5 years down the road?
The monetization model, obviously there's capital monetization because it's going to be a very valuable asset. When you look at the huge valuation premiums that are being given for Alipay or GrabPay or PayPal, we have just as good quality data, if not better. And then the earnings potential is going to come from foreign exchange fees. Obviously, many of our customers will use it when they're traveling, and hence we'll make money from that. From the float, obviously, on the prepaid cards. And three, at some point, money remittances, where we will undercut the competitor, the market at the moment. So huge earnings potential. Losses are minimal at the moment. It's not profit making. It's not going to be profit making for a while as we scale up. Raising of capital will come independently after another initial raise from Airasia, and then we think we have a very valuable asset, and we will sell 10%, 15%. An ICO is being talked about to raise capital for the next tranche. If you look at the value of Monzo, which is an exact similar model to BigPay, we're tracking much faster than Monzo. We're growing much faster than Monzo was at the same time. We have a huge playground in Southeast Asia. No one has really cracked Southeast Asia like Airasia has. If I tell you name ASEAN brands, there are not many, and Airasia is one of them. We're now going to create an ASEAN PayPal, and without spending billions, in the same way we created an airline without spending billions.
Is there a budgeted investment cost in BigPay during this period just to scale up, and a target break-even period?
Yeah. The break-even period could be tomorrow. Depends how quick or slow we want to scale up. From Airasia's point, when Airasia shareholder, we will probably have one more capital contribution, and then money will be raised independently. So as to break even, I would say about 2 years from now, and this will be the scale-up period.
Let's talk a little bit about the logistics business, Redbox. Will Redbox be leveraging on other logistics companies?
Yes. I want to just highlight that I think we haven't done a very good job. We have two cargo companies, Red Cargo and Redbox, and effectively they'll be put under one holding company. Red Cargo is our belly space, and basically that belly space is sold to freight forwarders, and Redbox is one of those freight forwarders. So obviously they have an inherent advantage because they will sell their belly space to Red Cargo, to other freight forwarders. So Redbox has already got some very big clients lined up. It's moving in the right direction very, very quickly. Dato' Shukri has done a great job there. Again, a very valuable asset as e-commerce grows. And Red Cargo, which we haven't talked about a lot, run by Pete. I can't pronounce his Thai name, it's too long. But Pete was the Deputy CEO in Airasia Philippines. It's going to be a very, very interesting model as he uses blockchain to build a marketplace for cargo belly space. So watch that space as well. So we have two very interesting logistic companies.
Let's talk a little bit about technology. Are there any plans to invest more into AI in order to reduce fuel costs?
Yeah, we are doing that right now. Our partner in that process is Palantir and Google. We'll be announcing a very big relationship with Google in San Francisco in July, and we're part of the Kaggle AI kind of cloud. And AI will be used to reduce cost, fuel being one of them. And we're very excited by more machine learning for reduction of fuel. AI will be used mostly for customer interactions in the first place. But machine learning will be where we will get some real cost savings going forward from all that data.
AirAsia has been emphasizing a lot on technology of late. Do investors view AirAsia as an airline with strong technology innovation or as a startup incubator?
Question of the year. I love it. We are a technology company and we're not an incubator. I think if you look at Amazon started selling books, we started selling flight tickets, and we're going to cover the whole travel ecosystem. As Esme and team will slowly show you, the very exciting projects that are coming out from Travel 360 to Big Pay, etc. We'll always have an airline that makes money, but we'll have some very, very exciting digital companies that will be worth a lot of money going forward. But we're a technology company, and that's why I keep telling analysts, don't look at us as an airline. Look at us in the same way you look at Grab Pay, or in the same way you look at Amazon. Of course, you'll say, well, we have huge capital assets, and we have volatility of earnings in that airline. But again, Amazon had huge assets in building their cloud, had huge assets in building huge cost in building their database. They lost millions in giving away products cheaply to acquire customers. So the parallels between an e-commerce company and ours are very simple. Oil may be the only differentiator, but we've shown how we've managed oil over the years. But this whole thesis that I'm running is you have a very good data factory from our customers. We then plow that data factory into huge ancillary income, which we've talked about at length, from food to selling duty free, etc. And then the third part of this revenue generating machine is using our data to sell more things to our customers. Financial services, which is when you travel, you're going to need financial services. Hotels, holidays, packages, tickets, and so on and so forth. So we are the Amazon of travel. That's where I'm heading, and I'd like to be seen as a technology company.
Okay, so there are two prongs to this question. To date, most tech startups are still burning cash from VCs. How would AirAsia position itself without having the need to raise cash multiple rounds from VCs while scaling up like Grab?
Okay, so here, these are great questions, by the way. Here is the key differentiator between AirAsia and Grab. We have customers. We haven't had to go and buy customers. So our capital needs, our capital in terms of equity needs, are substantially less. We're not buying market share. We're building market share through our size of our airline, and those customers are being funneled into a business that most competitors have to spend a fortune acquiring those customers. And we have a ready, usable market. So Grab spent a lot to go and build all those customers, and then they started Grab Pay as another service to those customers. Similar for us as well. But we have a real platform that can be used a lot through the travel ecosystem. So we will need to raise capital, not AirAsia, but these businesses will need to raise capital. We're going to gestate them till they're of a good size. My whole philosophy has been cash flow positive. I don't believe that we need billions of dollars to build this, because we've got real customers already. And as I said, we've limited ourselves to the amount of capital we put into these businesses. We're looking them to be cash flow positive very quickly. And then finally, we believe that we can raise capital and we won't have to be diluted much, because these are not going to be capital equity driven. We don't need that capital to grow. If you look at how much capital AirAsia consumed to build this airline, from 200,000 passengers to 89 million passengers, it's not very much. We did it out of organic cash flow, right, and leverage for the assets. So we fundamentally believe in cash. We fundamentally believe that we can build these digital models without throwing lots and lots and lots of cash at it. And we think we're more efficient and better productivity than a lot of the digital guys out there because of the airline that we have.
What's your aspiration for the digital business? Assuming 5 years down the road, would you say that revenue generated from the airline business would only be 50% and the remainder from your digital businesses?
I think that's I don't have a good enough view, but that's certainly the way we're heading.
In terms of digital economy, how do you see the e-wallet scene in Malaysia, and users are spoilt for choices with a wide range of daily promotions and deals from other e-wallet players?
Oh, because we're not an e-wallet. That's the most important thing to know. We are a travel-based card. That is a wallet, yes. That is exchange saver when you travel, and a remittance player as well. And eventually at some point we may do money lending as well. So we're not an e-wallet.
Do you foresee a consolidation in the e-wallet space in Malaysia in the next 2 years?
Wow.
And you've differentiated yourself from this.
Yeah, a lot of people will die. Like a lot of low-cost airlines started, named themselves after animals and are not there anymore. And there will be consolidation, there will be people, natural attrition that will die. That's the normal nature of the beast.
A little bit about cybersecurity. How safe are the user data with Airasia in light of the rampant cybersecurity breach around the globe recently?
It's a big project for us. It's like airline safety. I don't think anyone can guarantee that our airline's going to be safe every flight, every day. We can't. Safety is a marathon. Cybersecurity is similar. We're learning. We're applying the best techniques. We have a big department. We think we have the best, but I don't think there's any guarantee to say that we're perfectly safe. I saw Irene yesterday reading a cybersecurity book. That'll never happen with me, but at least she's reading the book, and you can see that it's a very high priority of us. But of course we'll manage the risk as best as we can, but I don't think anyone can say we guarantee that nothing will ever happen.
I believe that's it. This concludes our Series 1 IRTV for the new IR
Okay,
portal.
great. Well, welcome to our first show, and I really enjoyed the questions, so we'll keep it coming. We'll plan another one, and then we'll get other people involved in the show as well, and this will give you more flavor. But I think the whole purpose of this TV show is to continue to ask questions, but not all of these questions have to be answered through video. We'll continue to be as transparent as possible. We'll continue to be ahead of the game. So, maybe next time we'll get the CEOs of the digital companies to talk a little bit about their strategies and where they're going on top of what I just said. Thanks a lot, and see you on the road, or see you on investor calls, or just see you in the office.
Thanks, Tony.
Bye.
Bye.